morning. Today's date is the 26th of June, 2026, exactly 10:35 GMT plus 1. So today's trade, we're going to follow our principle. Our first principle is risk based. We are more concerned about the money that we lose. We don't lose money anyhow. So it's risk, right? Risk management is our primary foundation. So we ensure that we are always constantly monitoring our risk. And then we now check our six pillars. So if I want to start trading now, the first thing I do is first of all, I will check the daily charts just to be able to see what the entire day is looking like. So I see the daily charts. Yesterday's trade ended like this. The candle ended and it's continuing to going up. But generally, we're on a downtrend on the daily. You can't do anything with this. You just to see what the overall trend is. So from the daily, I move straight to the 1 hour. So now it is from the 1 hour that I will do my analysis. Now let's pick the analysis one after the other. The first thing is market structure. What do I mean? I've already explained in my video. You trace, let's start tracing from here. Up, down, up, down. So the market is going down on a downtrend. Now, what you need to understand is that when market goes up and it comes down, it needs to break this lower. When it breaks it, it means it's on a downtrend. When it goes back up as it's coming back, it needs to break this one. As it broke it here, it means it's continuing. So what is happening now is we're on a downtrend. So the first thing is market efficiency. We're on a downtrend. That is the first thing established. And then the second thing now is efficient and inefficient market. So remember I told you, I said when your efficient market means the market goes up, comes down, comes back to test the previous place, continues to go down. That is what efficient market is. So now this market came all the way down and created what they call the third thing, imbalance. Imbalance means it created an inefficiency, means it has created all the spaces and we're expecting it to fill it back up and then continue coming down. You can see. So the imbalance is that the market is inefficient, means that it was supposed to go up. Let me use one, two. Let me use one, two. Yeah, let me use this two. So it's supposed to go up, come down, go up again, come down. So it makes efficient. But when it now comes all the way down like this, it has created an imbalance. So we expect it to fill back up, to come back, and then when it comes back to fill up this way back to continue the downward movement. So that is what I was explaining. So now we are still on the downtrend, but now this is up and down. So as it is now, this market needs to at least come and break this place before we move back to uptrend. So so I've told you market structure, I've told you imbalance, I've told you efficient and inefficient. So let's look if there's any liquidity sweep, which is equal high or equal low. There's none at this place that I can see. And of course, the momentum is building towards the upside. So when the price gets inside this place, these two blue lines, we'll now go to the 5 minutes and start looking for a confirmation. So what we'll do now, under 5 minutes, so these two places that I marked is where I want to sell. So I'll go back all the way to the last place that the 5 minutes from. So inside here, I need to look at it. All of these markets, all of these have been efficient. You can see it came down, it filled all this order here, came down, this one came up, filled all this order, even all this spike, they filled all this order. This one came down, filled all this order. So the only order that has not been filled from here, if you look at it, is this one. So I will bring this one down. It's risky, but just to be able to reduce. Because what I'm trying to do is I'm trying to make people that have small accounts, you have $50 you are trading with. I don't want you to risk too much money. Because what is most important is that you don't risk too much money. You don't risk too much money, and you risk $7. So between here, 4071, 4090, that's about $9. Okay, we're still looking at it. This one has not been filled also. So anyways, $9. So you can see that as I'm entering the checking the trade, I'm checking how much I'm willing to lose on every trade. How much am I willing to lose on every trade? That's what I'm checking. I'm checking that for you that have $50 account. I'm checking it for you. So I check that, say, okay, when the price comes inside here, I'll be looking for sell. So as soon as the price comes inside here, this one that is going up, as soon as it enters there now, I'll be looking for confirmation, which is when any of those candles form, I will watch it. You understand? So right now, I want you to participate also. It's a live trade, it's still on. If you're still seeing this video, it's still on. So let's see how it goes. Now, market is risky. It's only two trade per day. If you have only two trade to trade per day, you don't want to trade anyhow. You understand? You want to be able to say, okay, this is my opportunity to trade. Let me trade properly. So the day is long. It's a whole 24 hours in the day. If you don't trade this morning, if you don't trade in the afternoon, in the evening, you can still see something to trade. And you can use that's your two trade per day. So don't rush. So we're going to be waiting till the price gets into this part and then we'll trade. And for you that maybe you are working, you can place a pending order. I'll show you how to place a pending order so that you don't have to be watching the chart to get it. So your risk is you say when price reach here, enter me, trigger my trade, put your stop loss on top of this place, and you can go and be doing your work. You can go and work for 2 3 hours. If it happens, you will see your profit has come in, and that's fine. So you don't have to be monitoring the trade like that. Okay, so today we're watching between 4071 and 4090 for our first trade. Thank you very much.